My name is Amy LaMeyer. I'm with WXR Ventures. We invest in AR, VR, and AI companies that have at least one female founder. We have 14 companies in our portfolio, and it's across all different industries. I'm going to do a quick shout out. Inga from ShapesXR is at Pico, if you haven't checked that out. Prisms is at Qualcomm's booth, and we have someone from All3D speaking later, but just definitely wanted to give those 3 founders a shout out.
Wonderful. My name is Jonathan Carmel. I'm from Impact Venture Capital. We invest primarily in AI companies, but have a fairly active XR investment as well, including Arbor XR, Infinidec is here, as well as Moth and Flame. And I'm based in New York. The firm's based in California, so it's a heck of a commute. Excited to hear your questions.
Hi everyone, my name is Petri from FOV Ventures. We're a fund based in Finland. We invest in mainly European founders building in spatial computing, multimodal and physical AI, done a couple of robotics investments recently. Do pre-seed, seed stage, nothing is too early basically. Checks of up to 500K, so very collaborative. We've done 31 investments so far. Started investing in 2022, but have been in XR for about a decade.
So I think the structure of this this panel is all AMA. So I'm not sure if there's someone out there managing the mic, but oh.
There's a stand, mic stand?
I guess, yeah. And I'm not sure if we can bring the lights up a little bit, just so we can see the speakers a little bit more. But yeah, anyone that wants to ask questions, please just line up over here. Otherwise, you'll have to listen to boring stories about how we found exciting investments. Is it working? If not, you can have mine.
Oh. There we go. Hello.
Thank you.
Howdy. Nice to meet you all.
Yeah.
So glad that you're here because I don't think that opportunity to ask investors these questions that I think people have looming in their head exists here. So really appreciate y'all's time. I'm Haseeb Musa. I'm a part of MIT Reality Hack and an organization called Founders and Funders Lab, where we try to blend giving and access and knowledge between investors and the startups that come out of MIT. And what I wanted to hear from you all is how your individual investment theses have changed in the last year or two, given the investment focus on AI and lesser focus on the augmented side of the thing, the content here. Curious how you've changed the way that you look to invest and prioritize investments now versus maybe 2 or 3 years ago.
So I've been an investor in public companies. I've been an investor in debt and equity, and I've spent my entire career in investing. I've learned that going where everybody else is a really great way to lose money. The price tags, we have some Gen AI businesses, and we stopped investing in them almost 2 years ago. The price tags make it almost uninvestable. I think that XR overall we're on the backside of the Gartner hype cycle, which is where we like to be. We've now gotten businesses that are heading towards profitability. I mean, one of the problems in XR is there are lots of companies with revenue and very few companies with profit. So we got to be close enough to that to have a line of sight for us to invest. And so that's been a lesson that we've taken away. Unfortunately, what's good for me when we sit on opposite sides of the table may not be good for you. The prices paid in XR right now are not, the multiples are pretty derisory. I like that. You may have to deal with that. That's just kind of the reality if you want to be in the XR world. My general feeling is when every other investor is running towards something, I try and run away from it.
I'd say that what the shift has really been looking at confirming whether or not we think this company can raise another round of funding in this market, right? Because that has shifted over the last. I've been in the venture space for 6 years now, so that's a higher level of awareness that we have now and a deeper amount of diligence than was first the case because there was more money that came more easily in prior years.
Yeah, I mean, that's the main thing that we're believers long-term in immersive technologies. We love VR, we love AR, but ultimately it doesn't matter if we believe in a company that we invest in if we don't see the downstream investors also investing in the company at some point. Because we're a small fund, our first fund, so we can't be there for you throughout every round, just like taking care of all the rounds. So it's more and more important, as you point out, to evaluate what is the team's capability to build something that will attract downstream investors after us. And to your point about valuations, I just saw a deck yesterday. Pretty random people, not coming from Synthesia or OpenAI or DeepMind, raising 10 million pre-seed for 10%. So you have to be realistic in what you put on the deck, and that just turns me off that kind of an investment immediately. And when it comes to your question about how AI has affected, I guess was the question, we've been in XR for a decade, and we've seen the highs and lows. We're still believers, but we're long-term believers. And as much as Ori said that XR is mainstream and it's today and it's not the future, now is a good time to invest and build the foundations, but it's still, the downstream investors are still very cautious about investing when you're coming in with a deck that says, hey, we're in VR or AR. But it's not saying that, oh, we've shifted into AI. It's just that we're building a portfolio which is a mix of immersive technologies and other kind of this shift into computing being all around us, moving from 2D to 3D, which is kind of our thesis. So we have we don't have too many investments in VR, AR, in Fund 1. It's not that we don't want to do, but we're managing other people's money, so we have to be kind of diligent also towards them in how we're building our portfolio.
Good question.
Great. Yeah, first, thanks again for being here. My name is Brian with ClimbRx, and my question is, what's your methodology to value a business that's pre-revenue?
Is there one?
I think of three things. I look at what is the solution that you're solving, what is the offering that you're giving, is now the time to do it, particularly relevant for emerging technologies, and are you the team to build it?
I would say we look at the size of the problem. Does the proposed technology solve that problem? And then can the team execute? I mean, when you're looking at a pre-revenue company, it's generally team first, team second, team third, and somewhere down the line, even and have you evaluated the problem? Have you, how have you validated that? So that's.
Yeah, essentially it's all about team. But then we're investing in companies where, I mean, the stereotypical way is that every investment that we do, or a VC does, should return the whole fund. So basically that's the math behind evaluating how much you're investing and what kind of a stake do you need to have to make it make sense from the investor's point of view.
Hey, my name is Georgi Klemenko. I'm from Charlotte, North Carolina. I'm an independent XR developer, but I am poking with some things and trying to see if there is a opportunity for the future. My question, and I'm not sure if I'm asking the same thing for the third time, but what are you guys looking for when you look for potential investment? Because I think it's important to understand what your expectations and like what your standards and stuff.
I mean, to us, it's largely the team, like you said. What comes down the line can be very much different than what we've invested in or what you set out to build. So then it's us trying to evaluate, is this a team that can execute on the plan? And if it doesn't go right, how are you capable of pivoting and shifting and trying to find the right way to take it? Or if it doesn't need a pivot, like, will you be able to attract the clients, the users, the right team members? So it's largely just trying to spend time with the founders and see if there's if it's multiple founders, how's the dynamic between the founders? Because I think it's number one globally. The reason of failure is just team failure or like founders leaving. So it's also spending time and being comfortable with the whole team and seeing how they are comfortable with each other as well.
And with us, right? Like how does the team take feedback? Right. For example. And so just to dive a little bit deeper into that team thing, will you be able to fundraise? Will you be able to hire? Will you be able to understand a go-to-market plan? Can you create the plan that then you can execute? Like all of those things are important for a founder. We dig into all of that.
Okay. Cool.
Yeah, do they have passion for this problem?
Resilience, grit.
All of that is critical. I mean, it's amazing how many companies flirt with both disaster and greatness at the same moment. And you have, there are literally days where you're like, oh my God, there's no cash in the bank.
Yeah.
Oh my God, we just got a great customer. And those two things can be true simultaneously. It can be especially hard in hardware. I mean, we have an expression, hardware is hard. It's difficult. Oh my God, we got a great client. Hey, we have no cash in the bank to buy the inventory we need to build the product to ship to them. What do we do? And how do we get through that? So that's, do you have the grit to do that? And the fortitude and the ability to, it's kind of an interesting thing about how much I want a founder to be true to themselves and also listen to me. And it's a fine balance. I don't have all the right answers, but we also like people who are coachable. That's a gray line somewhere out there, and it's different at different stages, and it's different with different levels of trust over time with our founders.
I'm glad you brought up hardware is hard, if I can just take a slight tangent. Particularly interesting in the XR space is how much the XR companies are reliant on the hardware that is being built. And so that was something that when we first started developing, or when we first started investing, I don't know that it had really clicked in with me that there's this massive dependence on these other companies for, in the XR space, I mean less on the AI space, although that's constantly changing. But just the dependence on the broader technologies, I think, was an interesting concept.
Thank you.
Yeah.
Hi, I'm Anders Tankenberg. We have Finland, New York, and Hawaii, if that wasn't confusing. People keep stealing my questions, so I have been kind of struggling to come up with new ones in line. Given the difficulty of XR, the length of the time span, what makes you excited about it still? Like what use cases, what verticals? I'd love to just hear each one of you just talk about it a bit.
I was talking to somebody yesterday, and we were speculating how many people have tried VR in the world. Like there's a certain set of installed base, but then how many people have really tried VR, and not counting cardboard VR. And I don't think that's a huge number. And that's the beauty of VR is the immersiveness, but that's also the challenge that it's still so it's such an embodied experience to feel it for the first time, see it, experience it. So it would be great to have more VR headsets accessible for testing out everywhere so that people could actually sense what it is, just do quick demos. And if you think about VR specifically, like training, simulation, like all those kind of enterprise cases, use cases are very compelling. And unfortunately, the defense sector has a lot of pull right now, but in the US, they're like the Finnish Vario headsets, like they're seeing huge traction right now and kind of training fighter jet pilots because you don't have to actually go in and fly the plane, but you can simulate doing that or flying that in VR. So the use cases are there and they kind of feel like no-brainers, but then, like Amy said, it's hardware. So there are still so many friction points in realizing the kind of mainstream adoption. Is it just still being patient? Like every year we're asking for patience, like it's going to be there.
For 9 years I've been saying.
Yeah.
And here's the thing, I still absolutely believe in what I'm waiting for, which isn't here yet. So it's when cost, comfort, and content are all available on the hardware. Because you asked if we still believe in this and passionate. I'm absolutely passionate about spatial computing. I'm going to broaden it from VR because heads up, hands free, the interaction of the physical and the vertical, all of that I think is really exciting. You know, kids born today could say, "Why did you ever have a screen?" Right? But until the headsets are easy to use, a lot of people have been saying today, look good. Yes, that's important too, but they have to be comfortable and easy to use. That's so important. That's why we're struggling with VR, I think. And they have to be affordable. People need to be able to buy them. And then we have to have the interesting content. And if you don't have all three of those legs of that stool, that's the tipping point right there when we have that. So yes, absolutely excited. Definitely think we'll get there. I think it's going to be a couple more revs of hardware before we get to that point. And that point for me is, you know, somebody that you walk into a Home Depot or Disneyland and you look at those people and they're the ones that are going to use it. It's not necessarily us. Most of us are probably early adopters, but it's truly the masses using it. I think it's a little bit off, but this is why now is a good time to invest and build, because we won't get there unless we, you know, continue to innovate.
I think we're more mercenary than others. I think people need to be forced into the headsets, and so they're not. I think they're still a ways away from people being voluntarily using them. So that leads us to a couple of the training situations. So our investments have been focused on the enterprise use cases. Any use case that needs muscle memory, we're there. That's definitely happening. You can look at the growth rate. So public company Axon, which company formerly known as Taser, they break out their XR. You can look at the growth rate of XR training. It's public information, and it's growing 40 to 50% a year. That's great. That's a good market to be in. So we are focused primarily on use cases that are that are here in the nearer term. We are seeing adoption of XR training by enterprises, and those that complete a successful pilot grow at somewhere between 20 and 50% a year. Walmart is a big user. I mean, Bank of America is a big user in doing things like training people with how to deal with a robbery, which is something that you need muscle memory. You cannot think, you cannot do it on a screen. So the use cases that we see in XR that are going to be successful over the nearer term, are things where you need good muscle memory. Or it appears to me, and this is less clear to me, that empathy, things where you need to be focused. Having a difficult conversation with somebody is probably better done in some sort of XR environment than it is on a flat screen. So because of the amount of focus you need, the body language cues that are given off, and then you are not easily distracted by what else is going on. That embodiment is really important. Very difficult conversations is a training that we're starting to see. We've got a company that does suicide prevention for the military. It allows the military to scale in a way that it cannot scale by hiring therapists. It's just too expensive. So if they want to touch every person at the battalion level, it's got to be done through technology, and this is the best technology for it right now. But they take their recruits and put them in the headsets. They have no choice.
Thank you very much.
Hi, I'm Amitash Singh. I'm currently a rising senior at UC Berkeley. I'm studying EECS and business there, so kind of very much in the space of the technology aspect, but also kind of the business and making those like investor relations, etc. So first of all, very happy to be here and nice to meet everyone. So my question is, essentially my co-founders and I were building an immersive platform based on 4D Gaussian splatting. And with this technology being so new, one of the things when I talk to investors is this essential trade-off between what is possible right now versus the vision of where Gaussian splatting and in general, right, 3D video rendering is gonna go in the next, 2-3 years. So my question is, as someone who is currently building and sees a vision for this with use cases beyond just, being able to load it up, but connecting people through maybe memories, for example, and many use cases in that nostalgia field, what advice do you have for builders to balance that trade-off when talking to an investor about what is possible now versus the vision that this is going to be 2-3 years from now as the technology grows and as our, code base is aligned to grow and adapt as that technology adapts too. So just some advice for builders.
So the challenge with VR, it's to a lesser effect now, but during the previous, let's call them hype cycles, the decks were always just littered with the technology. And often founders falling in love with the technology and not what is the problem that you're trying to solve. So Gaussian splatting, super exciting, but towards investors, I would always err towards just building the narrative around the story towards like what problem you're seeing and how are you solving that. And it's a byproduct if it's VR, AR, or Gaussian splatting, or what the technology is, kind of. Because an investor will either believe in your story and your capabilities in kind of building towards that vision, or they won't. And they'll just start nitpicking about like, well, I don't like VR, or is Gaussian splatting ever gonna be a thing? Yeah. And then it's just building that path towards like, we're gonna do this first and then we're gonna achieve that. But it boils down to just problem and solution, in my view.
And market, right? Like to talk about that versus the technology, because how can you confirm that the technology will be where you think it is in 2 or 3 years? You can't. So you can guess, but talk about it in terms of the market size and again, what is the solution you're providing? But
Yeah.
I wouldn't say Gaussian splat, unless you're talking to Tipitat.
I mean, I think you have to think a little bit in terms of what's your moat? Like, why are you a unique business? Why do I have to invest in you because I can't get into that market or get to that technology? I mean, you know, there are literally dozens, if not hundreds, of companies working on Gaussian splatting. So you've got to demonstrate to me that you guys are the right team and you've got something that's defensible. And there are lots of different defenses. There's a technological defense. I mean, a lot of people put faith in IP. I personally don't. For startups, I think it's kind of a nice to have, but like to defend a patent, you have to be wealthy, and startups by sort of definition aren't. So, you know, do you have a unique enough product where it is not really that replicable? Do you have so the military is a very interesting one. There, I think the moat is actually in the sales force. It is an incredibly hard market to sell into. So if you can do it, you don't necessarily have to have, it's helpful to have the best product, but if you have the best sales force, there is actually a moat in that. So there is a business moat in that. So thinking a bit about, you know, why you guys are building a business that has some protection for the investors, I think is a critical thing to do.
Okay. And if I may ask just one very quick follow-up. So the reason why I asked the question essentially was I feel like investors and in general just the sentiment around this VR AR space is when talking to someone, of course, outside like the immediate technological sphere, is people have a hard time believing what you're saying is even possible to do. Even though the technology is there now, even though the technology will only get better in the next year or two. So I guess that trade-off specifically, like, I understand the story and having a moat and having that sort of like narrative, right, is very important. But like, I guess the trade-off between that is also like would you still need some proof of concept essentially, right? Or you think it's really just
I mean, a demo always helps.
Yeah, okay, that's fair. Okay, makes sense. All right, thank you guys so much.
Yeah. Good luck.
Hello, I'm Jenny Ogden. We know each other, but not everybody. Thank you so much for doing this. I love that you're opening the floor for questions. And you've answered a bunch of the ones that I was actually thinking about. You know, we've got the team, we've got the strategy, we've got the passion and the why. And something that he just asked, I just wanted to go a little further down the path on, for early startup, are you looking for or requiring a demo or proof of concept, or are you interested in early, and I know you're not, but early startups with everything else in place, but we haven't created the prototype yet?
Yeah, it really depends.
Okay.
Like, I think what I just said is a demo is always helpful, and I still agree with that, but it's not a requirement. It depends on what the rest of the story is.
Okay.
So, I mean, people get really hung up in venture capital is kind of an interesting space. People get very hung up on, like, what round is this? It's just, you know, but basically I think, like, okay, pre-seed is like either we have a team or we have an idea, but we don't have both. Seed is we have the idea and the team, and we need to build the product and get product market fit. Series A is probably some degree of product market fit. So we have a product, we have revenue, and we need acceleration capital. Series B is more, we're now branching out into our second product. And then Series C, D, E, F just means that we haven't found somebody to buy us or been able to IPO.
We've invested in several companies pre-registration, where it's just been the team. But there it's let's be honest, it's an unfair, like it's not a perfect market because then we know the team usually. We know the people, we know their capabilities, and we can look at their track record and what they've done before. So that's kind of an indicator of they are capable of building stuff. So if you don't know the investors, then it becomes maybe a question of just being a bit more patient and putting in the work and time into getting closer to those investors and just spending time and educating them on who you are and what you've done before and what is the kind of vision that you have pre-product as well.
Great. Thank you.
Thank you. This is Dev from Ruby Healthcare, and I understand that you are taking questions, any questions, right? So that's why I kind of wanted, we do not looking for any kind of money from the investors in general, but we're looking for money from nonprofits like Alzheimer's associations and other kind of things, because we are in a stage of proving something for people with mild cognitive impairments. And there are particular XR solutions we are doing, and which has to go through some kind of a study, some kind of how much it is improving and all these things before we can get any money. We don't want to touch any money from the investors, first of all. So that is where we want to go. And I was wondering if you could give pointers how we can approach these nonprofits and kind of get them engaged and see how this is helping the people. It's more also to help people. It's not just making money here. So that's why I don't want to go to the investors.
Yeah, we have invested in a couple healthcare portfolio companies that have gotten some non-dilutive funding. Government-based funding is really where it's been, which is questionable in the US, but in the UK, it's a little bit, they have a program there, NHS funding and that sort of thing. So look through that. There's also 2 different apps, and I wish I could remember their names, but at least 2 apps out there that list all of the grants available, and that it's like a filter of what you're looking for, but it should be able to help you identify where grant funding is located.
I mean, yeah, I've invested personally in med tech companies that have gotten, non-dilutive grants. I think Amy, sized it up pretty well. You just need to go out and find them and then apply for the grants. Grant funding is going to be really hard over the next couple of years in the United States.
And the long process is the other thing.
Yeah, and it takes some effort to get the non-dilutive equity in the door. And I would say digital therapeutics have been a tough place. People have been burned. I mean, Pear was, raised $1 billion and sold for $6 million in the end. I mean, it's amazing what's happened there. But it's just a matter of doing the work, of finding these things, applying to every single one of these things. It's a lot about grant writing, which doesn't tell you much as being about a founder. So it's a mildly tricky space, but it's free money.
Yeah, more of a general point, because it can be hard to raise that first round of money if you don't have necessarily that much validation yet or proof of market, then VC money can be too early, and it's not the only de facto route. Like in European space specifically, there's a lot of governmental non-dilutive programs. You can tap into Europe. The EU has a lot of money, and the foundations that you just mentioned, that can be the first step into kind of building that validation, and then looking at outside money or kind of the financial side of things. So that can often lead to you being better prepared to enter kind of the pipeline of, hey, we're raising a pre-seed now, then we're ready to raise the seed round because we have more of a product already and some traction and validation.
There are also a number of accelerators that will give you cash, often for equity, some of them not. there's probably 50 to 75 accelerators, and you have to go find the right one that's focused on the same market that you're focused on. You do get a lot of support. They don't typically value the companies very highly, so it's a trade-off of what kind of, what's the return outside of the capital that you're getting from them. It's either validation, introduction to clients, introduction to investors, and the advice that they can actually give you in formulating your business.
And the other thing you've probably already thought about is working together with a university, and because they've already got money, and so if you can help their research, that might be a good win for you.
Yeah, we are working.
Don't
with
ask
multiple
Harvard.
Universities actually. Yeah, already. Yeah. Thank you.
Hello, my name is Bram. 10 years ago, we founded a company on screening and training of a blue-collar use case in logistics, being driving forklifts. We were the first to do that, so we called the product Forklift Simulator. We waived a bit the service of VR, but so far so good. We have customers, revenue are slightly profitable. We serve the military, schools, Fortune 500, staffing, so very broad. But then a couple of years, we also found there's little science to how people were trained. It was very post-rational, a guy with a clipboard. So we worked with a university to build a skills model to really what are the skills that people need to demonstrate in VR. We found indicators underneath, built XAPIs. And the way was to make predictive and adaptive learning to make people better learn. And we think that succeeded. But now when they start looking at everything what's happening in humanoids and having humanoid brains, we start to realize a lot of what they are looking for in terms of data or tools is basically what we build, because we try to make people better, basically make them work as effectively as robots. And now people with robots are trying to think what are the decisions that people need to make. So a bit of discussion internally in the company, what should we do? Because we're just simple VR people building VR hardware and software. So first of all, does this make sense? Second, is there a time limit to it? Because we have a bit of a feeling once they crack the whole humanoid issue or problem, yeah, maybe our business is in danger as well, but everything we've built also will be of no use in the development. And thirdly, how should we go about it? Because, as I said, we are focused on VR and building the VR. We're not super data scientists, or we don't have the big budgets of some of the big players in that field. So how can we maximize the value for our investors, but also for the work we've done and, yeah, the passion with what we're doing?
So, I mean, the humanoid robotics companies it's a truly remarkable space, in my opinion. I mean, Apptronic, which is one of the companies, just raised, they have no revenue, not projecting revenue till 2028 or something, and raised at a $3 billion valuation for hardware that is probably run rate, low margin, with a product that is somewhat undifferentiated. I don't think it matters if you use their robot or Tesla's robot or BD's robot, but they're flush with cash. So my advice to you would be, go ask them what they need. What's their problem? Listening to your customers in whatever your space is critical. That's who pays you. If you're not solving their problems, and if you're not solving a problem that to them is worth several times what you're asking them to pay you, you're not going to sell product. I mean, that's true whether it's hardware or software or whatever. So find out what your customers' pain points are. And your customers have money, if that's what you're really talking about humanoid robotics. I think it's a fascinating field, and there was one walking around earlier today, and I've seen these companies, and I just cannot believe what people are paying for them. It seems ridiculous to me, but I can understand the ultimate use cases.
Yeah, just to add, Jensen his keynote at NVIDIA said one of the 3 challenges he thinks is training robots. So we'll get there. I don't know when, but I think it's great advice to say who are your potential customers and what do they need now.
contradicting what I said earlier about not falling in love with the technology and talking about the problem solution. There is such a hype now in investing in kind of finding how are you working in robotics. I led a pre-seed deal into a company that is building general robotics, like robotic arms, very kind of low end. And they raised at almost 10x the valuation in 6 months. So there is such a high demand on the VC side into finding the next gems. Doesn't mean that they are going to make it, but maybe in this case you should put a deck together and just see what kind of pull it has on the market, on the investor side.
We've got 8 minutes, so.
I'll try to make this quick. My name's Brady. I'm a product manager. I've been working with early stage startups for about 11 years. I'm currently working with a spatial computing startup and 2 AI startups. I would just want to know, when you consider your wins and your successful startups, what has the product function consistently done across all of those successes? I work with founders, and I call it founder fever, and there's a lot to wrangle there, and it's magic in some ways, and it's really disruptive in others. I've got my opinion, but I would love to hear from the investors what you've seen consistently working from a product function.
I don't have a consistent one. Like, they're all so different.
One thing that we've noticed is the lack of marketing people in the founding teams. And one of our founders is here, and I think he was mentoring some teams as well. The marketing role should be baked into the product roadmap and development very early on, and specifically because that role is not about building the brand or the distribution channels, but it's about the relationship with the potential clients and the users, and being constantly there and being in the loop of building out not just the brand, but actually the product as well. And the success stories that we've seen is actually like building out the brand as well, but being there. Obviously, the good founders are there talking to the clients and building out the product. But when you add in the fact that you're building something that could have pull on the market and with the clients, that has been a success factor that we've seen.
Understand what the problem is. I mean, that you're trying to solve. And that's a tricky thing, listening to your clients. I mean, I think it was Henry Ford who said, if I asked everybody what they wanted, they wouldn't have asked for an automobile, they just would have asked for a faster horse. So you have to have a little bit of vision. But really what he was selling was a transportation service. I can get you from A to B better than you currently have. And it was something that everybody needed.
Hi, I'm Julia. Thanks for doing this. One question is, how do you evaluate and how do you look at companies with, say, great societal impact, but that will not give you a return for a longer term, so education place, for example? If you're not going to be getting your return in 1, 2, 3 years, but have a longer term horizon for something highly impactful?
I think the averages of inception to exit are over 10 years soon.
And getting longer.
Yeah, getting longer. So the long term is kind of baked in. But like I said before, obviously there's going to be exceptions, but typically an investor will look at an investment and see, has this the potential of returning the fund? Then it's also about founder-investor fit. Like, some people will be very mercenary about like looking at numbers and what is the potential outcome, and others will have different mandates to invest. So you have to kind of also do your homework, everybody, in finding out the right fit for you as an investor.
How many pitches do you think I get with male founders, even though we say right on our website, female founders. Lots.
How many emails do I get? Hi, Petri. I've seen your success in investing in fintech funds.